Hi, good evening, traders. We are on the 18th of April 2022. This is a Monday evening, 54 minutes past 7 p.m., and we had a gap down of a day for the Nifty Bank Nifty. We had corrected close to 4% till last week, but today's movement was clearly marked by the gap down. It did sell off towards the afternoon, but then towards the close, we did manage to see some kind of an intraday bounce back. But a couple of things have got established. One, and especially for Bank Nifty, that is, that it has broken on the downside. We will take a look at the Bank Nifty chart and we will understand this breakdown. For the Nifty, it's more like an extension on the downside. It's now close to 6% on a high to low basis correction. And the index essentially finds itself back to its erstwhile previous breakout zone. So we've been talking about that the upper border, upper region of this breakout, 17,400, 500 was the support. Generally it should hold, but sadly it was kind of very easily taken care of, and the index has closed significantly below that upper border, and now it's within the zone of the previous congestion. Will it stop here? Will it follow through furthermore? Well, the momentum has definitely picked up on the downside, there is no doubt about it. And if we break down this particular bounce back in terms of volume profile, we can very clearly see that most of the volumes did shape up in this region, 17, 250, 300, 350, 400. But that's very obvious because you see, the index did spend some time here, right? So when you spend 6-7 days within a particular range, it's very obvious that that range will have the maximum volume. So there's no doubt, means it's not a surprise that most of the volumes have happened here. But below this, the bare minimum kind of volumes that we can see is somewhere in this zone, which aligns itself close to its previous lows over here. And this is sub 17K. This is like 16,750 and all. But it's not a bad idea to observe the market, whether it manages to find some bit of support in this zone and post a bounce back. Well, it did post a bounce back. If you take a look at the 75-minute time frame, you will notice that there was this move, and towards the end of today's close, the index has actually taken above the high of this red bar, which was the breakdown bar, intraday breakdown bar. This can lead to a short-term trap, which can see some further movements upwards towards 17,350, 17,400 from a very short-term perspective, possible. But that's like from a very short-term point of view. The slightly larger picture from the daily chart is kind of, I would say, disappointing. And the main reason I say it's disappointing is this beautiful bounce back, which essentially led to a trend reversal, which consolidated and offered a breakout, has kind of given back quite a bit. Strong uptrends do not lead to steep corrections. Meaningful corrections are rare in a strong trending market. So whether we will bounce back or not, that we will see later. But one thing is for sure is, keeping this thing in mind that we have got a 6% correction, it's not a very strong uptrend. So this bounce back that we had noticed, this is not a very strong one. In terms of price, it was pretty good, but it couldn't sustain itself as much as a strong trend would have liked to. So let's see, any break of today's low can of course lead to further weakness towards psychological 17K. The market can, make a soft landing towards 17K, and anything and everything can happen in the market. But yes, considering it was almost a 300 points loss, out of which most of it has come from the gap down, we can see a clear sign of a range expansion. The index should ideally slow down with some minor gains or minor losses tomorrow. It should not be a very high trending, high ranged move in tomorrow's session. Some clarity we'll get from the Bank Nifty also. Now, this was the range that we've been talking about. It was within this range for almost 6 trading sessions. And we call these breakaway gaps. When prices break out of a certain range with the help of a gap, they are termed as breakaway gaps. Now, this is one such instance wherein I experienced that the index opened up on the reverse side of the trend being on the upside, but this time the index, rather than breaking out on the upside, it opened on the downside. This is not a very good, promising day for the Bank Nifty, though it too bounced back from its intraday lows like we saw in Nifty. But the breakdown, the breakaway gap and everything kinds of again brings in the question of whether this rally was good enough or not. It too is dealing with its previous range, and if we drop a volume profile here, you can very clearly see this is the range, and it's kind of dealing with the upper border of the range. We'll see whether it manages to see some support. I feel that after a big high ranged bar that we have noticed in Nifty, Bank Nifty and few other stocks, tomorrow is likely to be a little on the muted, softer side. A couple of things that I observed into today's trade was the market still continued to value and show attention to specific stocks. Insurance as a theme worked really well. I had spoken about HDFC Life in yesterday's video, and yes, we did see some pretty good move coming in from HDFC Life today. Hindustan Unilever also one of them, but sticking to the insurance theme, the market definitely paid attention to insurance stocks in today's trade. And a few pharmaceutical stocks, I was looking at DV's Lab, looks poised for a breakout. You can put in an alert at Cipla above today's high. That also is one stock which should offer us a move. And one more underperforming counter, Lupin. Cipla far more better in terms of trend, but Lupin is also one stock which is kind of hovering right there. Is not able to give the bounce, is not able to deliver the kind of breakout that Cipla had done recently. But there are still few stocks which are trying their best to offer a move. Metal stocks, especially ferrous stocks, did exceptionally well in today's trade. We did see some bounce back coming in from Tata Steel, JSW Steel, and primarily the ferrous counters. But there's not much pocket of strength. If I take a look at Reliance Industries, the stock is definitely oversold from a short-term point of view. There is a positive divergence with a pretty nice correction in the stock, and this guy is definitely going to give us a bounce back. But the important thing would be to see whether these bounce backs are going to be large enough to support the Nifty back to its at least to recover any significant part of this recent correction or not. So earlier the strategy was more like stay on the bullish side and look to trade the momentum breakouts. I think we should be a little bit cautious from here on. The trend from the daily time frames are mostly positive for most of the sectors and stocks. So I would hesitate to go bearish upfront. So I would continue to keep a bullish, then from here on this week, a cautiously bullish stance, wherein the trades will be short-term in nature. And yes, see, technical analysis essentially reacts based on the movement of price. And so when we have a confirmed state that the trend has reversed and it is weak, and that's the point I think it makes sense to go bearish in the market. Till then, it's not going to be easy to generate returns from the market this week or the next. We had a pretty nice trending move, and now I think we have to do a little bit extra to generate those kind of returns. So stock specific behavior, we'll continue to keep a look at these insurance stocks amongst the large caps. Keep a very close look at Reliance. Maybe tomorrow or day after tomorrow we should get a bounce back, and those pharmaceutical healthcare names which are on the verge of a breakout, especially Cipla and Davies Lab. We'll see whether we get that move or not. I think as I was saying this, I would like to take a look at Biocon. No, Biocon still doesn't have that kind of strength. So before I sign off, global markets are mildly positive. US markets bouncing back less than 0.5% kind of move. SGX is trading 27 points positive, nothing much in it. Crude at $107 and 1% gain coming in from gold. So it seems like the market is paying more interested to the safer haven, and equity seems to be a little on the back seat. But from a short-term point of view, we should continue to get trading picks. Let's see what's in store for us tomorrow. Take care of yourselves and trade well, trade wise.